An interesting day. As we said, the rally probably won't hold and the meltdown's not over. Here's a look at today and our algo room. The NASDAQ came in and actually got flat. So that, again, as I've been explaining about, we had more questions about the algo in the trade room. So first off, we have three rooms that project in our advisory service. So our advisory service includes a newsletter, email alerts. People can attend a live trading room where you would see this exact page in the, this is one of the rooms called an algo room. Basically, it prints the signals and then it transposes it right, in case you can't see the arrows, it shows it right here in this trade tab right there. So the markets that we have are the NASDAQ, the QQQ, the SPDR, SQQ, crude oil. This is just an indicator page. It kind of gives my traders and our clients a look-see at the advanced decline on the S&P 500. Some people like to look at breadth analysis in like the ARMS index. But what I'd like to do is, if I'm trading the S&P, I want to know everything about the S&P, not a like and kind market that's not the same. So therefore, we look at the advanced decline. One thing that I'll point out that's not a very good thing is this moving average yellow line, and I'll expand this up for you real quick. This advanced decline is a moving average component. And when we get moving average, the short-term yellow line crossed below the blue line, generally we get more follow-through weakness, and we got that signal today. So again, as I was explaining the other day, stochastics can stay over sold for as long as, you know, markets can stay overbought for a while. We may go up to a zero line and have a reject. We're not tremendously oversold quite yet, so there is room to the downside. My guess, using technical analysis, person's pivots, you know, April lows aren't that far out. There's a small little gap here around 505-ish level. Take out Monday's low on a retest. Somewhere in there, I would imagine, would start getting people panicky, especially as we, if we were down into that low into Friday. So tomorrow, my 2 cents is we're going to see some more follow-through weakness. Maybe talk was that the market, you know, had bottomed out, and as I've been telling people, markets don't bottom out in one day. The E-mini, or excuse me, the spider model was long. It flipped into a new short position, so it's now on a short. As I explained before, red line, it connects the dots. So you will see on this chart an entry and an exit that took a small loser, and then it reversed and went short. So it didn't stick around on the long very, very far. This is the E-mini S&P model that we have in the room, and it didn't take long. There was a drawdown from, and again, I want you to explain this to you. This runs 24 hours a day. Not many people would run an automated trading system 24 hours a day. So in the Asian markets, in the midnight markets, in the market time frame before the European, this thing's just running. If you look at the signal here, it went long and it got stopped out. Connect the dots with the red line, it's a loser. Connect the dots from the entry to the exit, it's a winner. Just to explain, I was giving a little heads up to my traders today that first and foremost, as the market was rising, the momentum of volume was weakening, and that's not a good sign. I said, and besides, if we break this gold line, which is 5301, that's the 3-period pivot point. That's what makes the person's pivot so powerful. And it gives us the idea that today had a lower resistance and a lower support, and rallies could be looked to be sold or look for breakdowns, and that's exactly what we got. And that's why I drew that fuchsia colored line. I said, you break that trend line. And sure enough, not only did it break the trend line, but well after the fact of me drawing in that line, probably 5, 10, 15, 20, 25, 30, 35, 40, 45, 50 minutes later, it generates a sell signal. Really nice trade. These little yellow dots are a trailing stop function that's designed into this program that are conditional change trailing stops. So if the market right now, it is in an active short position, and it has a couple red lines. That was the initial risk. This was a just computerized generated number that would say if the market goes down by a certain amount, put in a trailing stop to protect the profit, and that's what that orange line is. As the market starts to move lower in the general trend direction of the trade, it will start protecting, and at the close of every bar, it will then generate a trailing stop function. So live right now, if the market popped back up to that yellow line right here at 52.212, it would be stopped out of a short from 52.43. So that's an active position right now, and that's exactly what this shows. Short 52.4375. That's the time the order was filled. This is the current price of the market, and that's the program. The overall strategy performance, and I'm pretty sure I share this with you from time to time. This is the S&P. Again, most of these trades were this drawdown of profit were in the overnight session, and it didn't take long for this thing to go from, and the green dot signifies a new equity high, and this is going back since June 30th. So that is the program that we run in the Algo room of our advisory service company. Now, what about the market overall? So I want to give you a couple things here that we're going to look at. Besides, a couple of the earnings that came out, VF Corp, I believe, was one of the trades that we gave out with the high close doji on a monthly basis, and that trade worked out quite well. Once again, it was a rough road. I talked about Shopify being a better after earnings trade possibly, and I'll probably be right, but in the meantime, it was up 17% today. The other one, I said that Disney, I'd be more impressed with buying it lower, and I think whatever the earnings are, that's another one that I said it'd be better earnings, and I still think there's good value somewhere near this monthly support around 83.68 to right around that 82, and that's what I'm looking for that stock to come in. It came out with okay earnings, but it was disappointing overall. Shopify, again, what to do with this? There's a huge gaping gap in the market, and it gapped lower and gapped higher, and eventually I'm pretty sure that's either an abandoned baby island bottom pattern on a daily chart, which I don't think will turn out to be. Odds are we come in and try to fill some of that gap at 56, and then we'll revisit Shopify. In the meantime, I want to go through these stocks for you, which I think is important to look at. First off, ORCL, Oracle. Oracle generated a new low close from Monday, and that opens the door for another leg lower into maybe around the 120 handle. And so if you're looking for opportunities in the market, I'm between 120 and 121, something like that. You either got another $4. Today's sell-off, by the way, was on heavy volume. I measure heavy volume if today's volume is greater than the average of the last 10 days. And let's face it, the last 10 days, between yesterday, Monday, Friday, Thursday, you take an average of these moves, these have been pretty wide range bars. This has been some pretty heavy volume, but today was heavier than the average of the last 10 days. That means that was heavy liquidation, and it didn't even rally today to close a gap. It didn't even rally and open higher substantially from yesterday's highs and closed on its lows. Oracle has more downside. Oracle goes down, it's going to generate a little bit disfavor amongst technology and at least that particular sector. META with the MAGA names. Meta also was down today off its highs and closed below the open on heavier than average volume. So my take is the odds favor we go back and test either the midpoint of Monday's range, if not the weekly support around that green line in the sand around 454. So watch for more relative follow-through weakness, and it more likely would if we see Meta down, it's one of the few stocks relative to Apple, in fact, which AAPL, I'll put a fat finger in there, AAPL, try to make this painless here. Apple was another one. It had an update on very light volume, and I know a lot of people are thinking Apple's the one stock that can be saved. This gap down here at around this 178, long-term pivot support exists a lot lower as well, right around 180-ish. There's just a lot of confluence of support levels down here, and the technical indicators such as the relative strength PMC has been weakening despite the fact its relative performance to the S&P is weakening. That's what that red line means on the person market catcher PMC indicator. Look at the trend of the momentum of volume. It's weakening. So rallies are weakening. If there's systematic weakness in the overall market and people need to maybe capitulate or lighten their trades up, like Warren Buffett selling half his position out, if others feel the same, you're going to get, at the very least, a challenge into Monday's low open, and then maybe it'll take time into September that we could fill that gap. I mean, I don't think we're going to go straight down to hell in a handbasket in one day. So it's going to be a process. Another one that was just disastrous for people that's not in the news, wasn't an earning, besides Intel, besides a few other names, was LYFT on huge volume. I think the volume on the LYFT was 3.5 times its 10-day average volume. So that means this could either mean one of two things: a complete capitulation. Okay, I buy that. So, I mean, it may be getting way oversold. It was relatively too weak in the overall relative performance of the market. So when they get to be that extreme with that much volume after a prolonged downtrend, sometimes that can indicate a severe oversold condition, and maybe longs just finally capitulated. Intel, by the way, a new low as well. News is there being a class action lawsuits coming against them, for failure to disclose the fact that they suck. So Pat Gelsinger, who is the CEO, has consistently come out, and I remember at one of the earnings, and I don't remember if it was somewhere at the end of first Q1 earnings or if it was the end of fourth quarter or Q1, came out and said, business is slow, no one's buying semiconductors. At the same time, or a week after, Nvidia had said, we can't even make enough semiconductors. So, Village Idiot Award of the Year, Pat Gelsinger, ruining and just absolutely destroying America's most four prominent technology firms, Intel. So that is why it was even under more pressure, because now it's got heavier liquidation on class action lawsuits coming, and we'll see where that goes. Big names that had an earning which had bad reaction, lots of competition in the space, potentially from Viking Therapeutics, from AbbVie, and others. We had Novo Nordisk, GLP-1 drug, and then Lilly reports tomorrow. Sales, I mean, again, it may have had a little bit overexposure. It's a crowded trade. Everyone was in it thinking it was going to go up forever. But one of the things that I would point out is, as markets make new highs and my volume indicator shows a bearish divergence, you never want to be long. And until we get a positive performance, a buy signal, relative strength improvement, and increased volume, I'm not going to touch this. My 2 cents is it's got a gap at 111. I'll look at it between 108 and 111. And that's, back in the January area of what caused the whole breakout. And that would be an interest to me. So we had another one that may be of an interest to you guys is in the precious metals arena. This is Newmont Mining. This has been I would have to say for years, a disappointing trade. It just finally came back up to around 46. When I say disappointing trade, this is a mining company that you take gold out of the ground and you sell gold at historic highs, and yet your stock can't make a commensurate higher high. And that when I say what I mean by that is that's the old high in April of 22, and your stock can't. Now maybe it comes later, maybe it's but right now, there's a problem with the volume trend on this. And so today's little daily sell signal in Newmont Mining was also on super heavy volume, greater than its 10-day. All right, so that's the bad news watch for tomorrow. We take a look at AMZN, for example, and say, what does that look like to me? It still looks like we got more relative weakness coming, And at the very least, we could see Amazon 148. What about, let's take a look at one that everyone wants to see, SMCI. Super micro, phenomenal. It was this is a story that should be told on the news. I don't know if everyone's going to mention this or not. They may talk about how bad it was, but last night when earnings came out, they beat top line, bottom line in the first few minutes after earnings in the extended hour trading. We were able to get off trades. They were trading at 728, 727 last night on an intranight high, and all of a sudden, when the earnings call came out, and then the one metric that came out that said their profit margin had come down, even though they beat and they gave great guidance and everything's good, it cost them more. Their operational costs had increased. The stock went from 705, 700, 690, 688, 656, and then the next thing you know, you were trading at under 530. Now today it had more follow-through weakness, heavy volume. Next stop, I don't know, somewhere between where it broke out of the old high, and I don't know, that would be ugly. 363 would be major support. We'll probably find some interim support in the next couple bucks, 460 to 480 zone. So you want to kind of watch for that. What you want to see, though, is you want to see a 60-minute chart, and I'll share with you what I would be looking for when I'm more convinced that the low might be in, that we get a couple things. If you don't have access to the person's volume indicator, use on balance volume. What you want to see is the market, when it goes down, you want to see volume stabilize, if not go up, and maybe form a little bullish convergence pattern. So here we have a low right here. If you take a look what I'm sharing with you, on June 16th, the market rallied, makes a low, rallies, makes a new lower low by June 24th. The June 24th lows took out the June 14th lows. If you look and you say, well, where did the volume go? Why is the volume OBV reading higher than prices lower? And that gave you the kind of the sign that, you know, it took another 1, 2, 3, 4, 5 days, and you got, you know, a nice 2-week rip to the upside. So if we get lower lows, you want to see higher lows in volume. That would just tell you that the selling pressure is abating, and it give you a little bit safer time frame to go in the market. So it's not generally as much about price as it is about timing and price, and the condition helps the volume, that is, helps you to navigate a little bit better. Now, these are some names that I'm pretty sure that a lot of you guys are not going to be into, but I just wanted to report again. VFC did have a big rally on its earnings. We were long that stock this morning, pumped out of it. That was our call. And one of the main reasons is we had noted that there was some unusual volume activity in the 16.5 calls that expire this week. The options doubled in value, and we have a rule on every double, get out. And you know, bottom line, that's the majority of what traders would do anyway. I would say that there's a couple things in the Chinese arena. PDD at the end of the week, if we don't update the videos in time for you, PDD, just make sure if you find that it closes Friday or it's in the final minutes of the day, PDD closing greater than 131.46 to be precise, that's last week's high, that would generate a weekly high close doji. And what I find interesting is in some of the Chinese related names, PDD owns Temu, if I'm pronouncing it correctly, an online portal e-commerce product site that you can see it throughout. Even I think they even have exposure to Amazon, but with sales. But bottom line is the relative performance here is improving. And I always like to see stocks when the stock market goes down, what stocks are outperforming or improving. And if we get a nice pop on and there's more participation in volume, that's another great sign there, PDD. Alibaba, BABA, Alibaba is another one. Relative performance is bright blue. Volume's no bueno, but on the daily basis. So the market's probably under a little bit of pressure. Nobody wants to rush out and buy Alibaba right now because they're worried about Nvidia and they're worried about Apple and their life savings in the market. But someone's been buying this on the institutional side over the last 4 months. That's generally what monthly volume indicates to me. Institutional traders, the huge base action of volume here shows that people are locked and loaded long. they'll get longer as this thing starts to prove itself. And that will show up when price starts to make a move, followed by strong volume action. So keep your eye on PDD and again, BABA. All right. We are kind of NVDA, not to give you every stock in the world, but Nvidia, again, relative performance is weak. So just a case study. When you start to see stocks go up and the relative performance starts to go down, when the relative performance is negative, it doesn't present warm and fuzzy buy signals. This is one that even the volume has been pretty heavy in liquidation. So the 2 cents here is that we are going to see with a daily sell signal in Nvidia, odds favor we take out Monday's low and we get down to maybe a little bit something more sinister into this level right here, which was I think we have some higher time frame pivot support. We do, and it's basically the lows that we had in May, which was around 81, and you can see between 79.36 is a pivot, and that whole structure right in here where the market closed, in fact, intersects from February's close was 79. So that level back there will offer some kind of, if we get down into that zone, you want to start picking up Nvidia again. And if just like I said earlier, same situation. If it gets down into that zone, and it's not going to happen overnight, it might take some more time, some back and fill. Back and fill means just like the market did. It goes down, it goes back, and it goes back to fill. Back and fill is up and down with lower lows and lower highs. So when you finally reach a bottom, you come through either a high volume capitulation, exhaustion, capitulation type of pattern, or you're going to get a bullish convergence pattern where the market goes down, sells out on very light volume, and it's just capitulation. Weak longs get out of the market. And you will see that whether, again, and just to reiterate, whether you have my indicators or not, whether you can also go and use what we have here on Thinkorswim. And again, you can set up charts just like this, which give us our buy and sells PPS with a person's pivots. This is Snowflake, by the way, one of our active trades. And by the way, Snowflake is doing exactly what I would be looking for any product that I'm looking to see a bottom in. I want to make sure that if we get lower lows, we have higher lows in volume. It says that the selling pressure is starting to abate. That does not mean that we can't see another trade, a back and fill trade to 108, or maybe just dig into these lows. While we're trying to find some value in a lot of stocks, or when any stock or any product starts to make a low, they base out, and they're difficult to trade when basing out. They give you false rips. They will chew you up. They will think you're going up, and then they come right back down and form what we call these W bottom patterns. Here's a W bottom. Looks just like a little mini W. And then finally, when you start to see that the volume is starting to stabilize and go higher, you can start to successfully trade the recovery. And at this point, we don't have that. What we have here is an old line from a movie called Cool Hand Luke. What we have here is a failure to communicate. And what that failure is that people are not looking. Here's a decisively bearish channel trend. We hit one side of the channel. It doesn't mean to say that we can't come back down and hit these pivot supports. But if we do, and the volume doesn't subscribe to a newer low, it gives me the inclination that there is a temporary bottom, if not a major bottom in place. So anyway, that's just kind of some of the stuff that we look at in the market and how and where I'm looking to take trades. So you're not going to want to hear this one, but there's a, in the medical field, Medtronics, MDT. Now this gave kind of a Medtronics, here it is, MDT. When I say you're not going to want to hear this, because it's not a sexy stock whatsoever. But between that and again, a real unsexy product called British Tobacco, which was up today relative to the overall market. These are kind of been long forgotten stocks. And when I say long forgotten stocks, nobody's been looking at this stock. Nobody cares about this stock. Volume kind of is based out. But, one thing that I like is it's in a weekly buy and it's starting to improve. And it does have something going for it right now called higher lows and higher highs. And so by Friday, if you close greater than the open, this is another stock that I think longer term, which over the next, say, 90 days, my 2 cents is you easily got a pop back up another 5% to 10% higher in that name. So we'll find something better than Medtronic, but in a market that looks like it's ready to retest lows and get fear and panic back into the market, these are some of the names that might provide some relief in the near term. That's all I've got for tonight, gang. Again, we're focused on maybe a 504, 500 handle print in the SPY. At the very least, we're looking for the market to re-challenge Monday's open low somewhere in there. Challenge, once again, could mean we don't quite get there. We get there almost exactly for a precise double bottom, which would be extremely rare, or we take it out a bit, and that's my sense is, based on other indicators that I look at, the market goes down. So short-term puts, maybe a Monday SPY put if you get an opportunity on a rally Wednesday. You can lean against the highs here. You don't, if the market truly is bearish, you don't want to see these highs taken out. And if you do get maybe a chance of a market higher open or something like that, you can look to buy a Monday, maybe the 510 or lower, a Monday expiration, the August 12th. They're very cheap because if we somehow on Friday or by Monday, I would suspect we have one more test of that low right there, and that would be a fairly decent short-term trade to go with the negative momentum for the immediate future. Thanks again for everything watching. And if you want more information about the advisory service and the things that we do here, visit the website at personsplanet.com. Just go up there and say info or contact us. There's all kinds of neat stuff there to visit through the website anyway. If you're watching the YouTube video, you may have gone through the Persons Planet website to get there anyway. So have a great evening. Thanks again, everybody, and I hope this information found you well.